We're going to get rolling. Please do throw your questions in the chat or jot them down as we go, and we will make an effort to get to them. I'm going to move fairly quickly because I know we're going to be snappy today. But every farm does deserve a safety net, and we're going to start with that. What to expect in today's presentation, why should you care? And we'll talk a little bit about the crop insurance background, and then we'll go through some different options that may be useful to the growers you're working with. Then we'll hopefully have some time for discussion. So why should you care about crop insurance? Oh, I've neglected to mention, we have a work group on this topic, and most of what I have learned about this topic, I have learned from our work group. Our work group is housed at Organic Farmers Association. That's where I work as Farmer Services Director. And these folks really know this in and out. There's some extension educators in there, lots of farmers, and then a couple of agents. And we'll be hearing from them because really it's not me that you want to hear talk about this, it's them. They're the ones who really know. So I'm going to read you some quotes as we go. So we'll open with this. Mainstream farmers will say that the most important part of the Farm Bill is the safety net or crop insurance. I began to question that through my work with small and mid-sized farmers when I realized they don't get insurance. These policies are made for certain farmers growing certain crops. And that's from an extension employee in the Midwest. So why does it make sense, kind of as Ben teed up for us, why does it make sense for you all to be the ones in the know about crop insurance and to be sharing this with the farmers? You're on the farm to verify the OSB. You're there to act as the eyes and the ears of the certifier on the ground. I saw who some of you are. I know you're quite skilled at this. You're also there, you know, you're in the house and maybe somebody's got a new baby and maybe you're holding a new baby for a minute while you're doing the inspection, or like you're in the shop and like somebody opens the door, the wind blows, the farmer's shoebox of paperwork goes everywhere. You're helping pick it up, right? Like you're there also to connect and support. And this is just like one more way that you can be connecting and supporting farmers. The regs say that you can't help farmers overcome the barriers to certification, but they don't say anything about you helping farmers overcome other barriers that are in this way, in their way. And so crop insurance, connecting them to information about it is a way that you can, you know, support doing that. Have you ever held a baby on an inspection, Erin? Oh my gosh, it's like a privilege and an honor. All right, so we'll keep chugging here, Natalie, thank you. So organic farmers are facing extreme weather events, as we know. We know they're facing consolidation in land and markets. And in this specific situation around crop insurance, our group has identified lots of barriers when it comes to lack of information and outreach about crop insurance. So thank you for being the ones to help spread some information on this important topic. So here's another quote from that same extension employee who works with our group. There are barriers not just to crop insurance, but to accessing reliable and credible information about crop insurance. And luckily, we'll just go to the next slide, please. Luckily, these folks that you work with had the forethought, first of all, to put together this project, and then the skill set to really take technical information, crop insurance can get quite technical, and share it in a high-level format so that folks can avail themselves of resources. So these are pictures of some of the print materials that will be provided to you to be sharing with the growers you're working with. So now we'll dig into some crop insurance background. This is a map that shows organic farmer participation in risk management agency programs. And as Ben said, there has been low organic farmer participation over time. We know that some of that has to do with farmers seeing their diversity as their safety net and utilizing stacked enterprises, diversity of rotations, value-added products on top of what's being produced on the farm to hedge their bets in terms of fiscal management. But we've also seen some increases in organic farmer participation in crop insurance over time. And here you can see a snapshot. This is county level data policies per county. So the dark green, there are more. And you can see parts of the country here where we have a dearth of policies in crop insurance. And one of our work group members, he's a farmer of color from the South, and he indicated that there's nobody trying to sell crop insurance, to folks in his situation in the South. And so we can see areas of definite opportunity throughout the nation where more outreach and education and support could be offered farmers for participation in these programs. Next slide, please. So how does crop insurance work? It is purchased at a subsidized rate. It is subsidized through the federal government, which is utilizing tax dollars. So we're all paying for crop insurance. It's utilizing tax dollars, but it is a public-private partnership. So it's sold through private insurance companies by crop insurance agents. And there are different options for different scopes of production, which we'll dig into here in a second. There are also some extra options, which are called written agreements. And those are for when there's not a policy offered for a particular crop in a particular county. And those can be tricky. We'll get into that. Next slide, please. So we already noted that kind of insurance information and education is lacking. And one of the things that RMA has done in the past few years to help try to make this easier for folks is an RMA agent locator. So sometimes farmers think that they have to work with a local agent, and sometimes there isn't a local agent, or sometimes the local agent isn't super up on organic policies and options, or maybe diversified policies and options. So the farmers that you work with, just so they know, they are not required to work with a local agent. They can work with an RMA agent located anywhere. And there's also an agent locator product for whole farm revenue protection, which is designed for diversified operations. So there are good options for learning about agents who could serve them. Our group is currently asking for an organic insurance agent locator, for folks that have experience with organic crop insurance. We think that'd be really helpful. Another thing that's important to note when talking with farmers about this, similar to the role of an organic farmer in conjunction with their certifier, part of the expectation of their role is to be communicating with the certifier, right? Like, you don't like showing up on an inspection and, finding out that something's gone in or something's changed that is, indicated nowhere in the OSP, never been communicated. It happens, but it's not ideal. It's similar with crop insurance. So part of the role of the farmer in the crop insurance process is to be in close communication with their agent. So they want to find somebody they feel like they can work with. Next slide, please. So we'll dig into some different crop insurance options for organic producers. So multi-peril crop insurance might be the one that you've heard about the most. This is kind of like the old school regular crop insurance. Crop insurance started in 1938. Okay, and some of the more established policies would be multi-peril. These are available for major commodities like corn, soybeans, wheat, rice, and cotton. And it ensures a percentage of historical crop production using this metric called APH, which is annual production history. Annual production history gets tricky for organic farmers for a couple different reasons. One is when you change production style. So say you're conventional and then you're transitional. When you move from conventional to transitional, you start all over with your annual production history. So you can't use the yields that you had produced as a conventional farmer to indicate kind of risk calculations as a transitional farmer. Unfortunately, the same is true again when you're done with transition and you start organic farming, certified organic. Even though that management should be the same, right? From transition into organic, that starts all over. So folks are using what's called like a county average or county yields to insure against. And oftentimes those averages don't reflect reality for those farmers. And so farmers are at a disadvantage. Organic farmers and transitioning farmers, and also beginning farmers, interestingly, are at a disadvantage when engaging with multi-peril and trying to build annual production history over time. It's also tricky for organic farmers because they are engaging in robust crop rotations, or like we're hoping they're engaging in robust crop rotations. And so it's by crop. The production history is by crop. So if you're only growing 2 crops, you're much more quickly building up your annual production history than if you're growing 6 or 7. It can take 15 years. So it's a challenge, but once folks do have an annual production history built up, this type of insurance is quite well established, and folks have had good luck with it. Next slide, please. So here's a note from Scott Myers, who's an active member of our work group and also our policy committee chair at OFA. He has used crop insurance, I think, since 1982 and has been organic, more recently. So he said, when we moved to organic, and tried to replicate the same method of crop insurance we were using before, which was multi-peril, what we found out right away was we had to use the county average yields, which in some cases can be 30 to 40 bushels lower than what we were producing. So he figured that out pretty quickly. Next slide, please. A win in recent changes is something called enterprise units. So if you can imagine this as buckets. So my conventional, say I'm a farmer who's got conventional, transitional, and organic production. This enables me to insure my conventional crops a certain way, my transitional crops a different way, and my organic crops yet another different way under the same policy according to my needs. So it existed previously for like irrigated ground and non-irrigated ground, but they didn't have it existing for organic and transitional. And we think this is a really good change. And it was advocated for out of a former work group that I worked with when I worked for OFA, a different OFA, the Ohio Ecological Food and Farm Association. And I've got a quote. The next slide is a quote from one of the members of that group. His name's Eric Rieker. And Eric he works for Ohio State University as an extensionist, but he also is an organic farmer. And his transition was more recent, and he's like a numbers guy, right? He's a data guy. So he really understood these buckets and how they could help. So crop insurance is complex, but often required or desired by new to organic farmers. It doesn't take but one growing season for them to realize that growing organic crops is a much different system than growing conventional crops. So they desire to protect those risks separately, especially in transition. The new enterprise units by organic practice, now being offered by USDA RMA, allows for separate enterprise risk protection for these practices under the same multi-peril crop insurance policy and for a nominal increase in price. Enterprise units will be a positive policy improvement for transitioning to organic and parallel production organic farmers. So Eric's a fan. He's also working with a lot of transitioning grain producers and has started the Ohio State Organic Grains Conference. So he's in touch with like a whole bunch of people who are going through this and can kind of ground truth his assumptions. Next slide, please. Another positive for organic producers is something called price elections. So these started, I believe, in the 2014 Farm Bill, or was it 2008? I'm sorry, 2008. But then they were expanded in the 2014 Farm Bill, and they still need to be expanded further because when agents don't have an organic price election on which to hang the calculations for their policy, they have to go digging for it. And it's not always readily available because there's a lack of organic data for many crops that's available to agents. So if you've got an organic price for whatever it is that you're producing, then the math to ensure that crop for either yield or revenue protection can be more readily calculated and negotiated in the existing system. Next slide, please. Another really good option is the contract price option. So let's pretend I grow a special type of blue corn for these special blue corn tortilla chips. Okay, and I get a price premium for the color and the quality of that corn that has to be specific for these tortilla chips. What I earn for that corn is higher than the organic price for organic corn. I should be able to insure my crop if I've got a contract to that higher price. Another example would be like a special form of wheat that I ship to a bakery that's got certain characteristics that bakery needs. That would be another good opportunity to use the contract price option. There are some caps on the contract price option which need to be fixed because I think they've got it capped right now at double the conventional price, which is not, again, reflecting reality. So there's improvements that need to be made, but still this is better than not being able to insure your crop at the contract price or closer to it. Next slide, please. Then we get to written agreements. So I'll give you an example out of the Midwest where I have better familiarity with the rotations. So there were a number of producers in this region that were integrating sunflowers as an oilseed crop into their rotation in recent memory, let's just say like the last 10 years. And some farmers were doing that and just straight up not insuring sunflowers. Some farmers were doing that and wanting to insure the sunflowers, but we're told there's no insurance for sunflowers available in your county. And they're like, but we've been growing them for 3 years. They're doing great. Like, haven't other people been growing them? Can't we take data on this? And they're like, well, if they're not insuring them, we're not including the data. So we don't really have background on this. So those folks were negotiating written agreements, which means you have to give a lot of information to the agent and essentially justify why this crop should be insurable in that particular place. And what we found, in talking with the work group, two things. One is that written agreements are a lot of work for the grower because they're kind of tasked with explaining why they should be able to grow the crop successfully there. They're also a communication device with the risk management agency. So the more written agreements that risk management agency sees in a particular county for a particular crop, the more they are likely to work on providing insurance for that crop in that county. So it's kind of a little bit catch-22, but good to know, right? And good to let others know so that, they can still potentially seek insurance for the crops they want to grow. Thank you. And then we'll move on to specialty crop insurance. So this is Seth Kreck. Seth grows a bunch of things in Maine, and he's at Crystal Springs Farm. I thought he explained this really beautifully in a webinar he did for us. So you may have a crop that could never be considered a commodity crop, but it's significant to the income and the character of your farm. To lose that crop for a year would significantly challenge the viability of your farm. If you have a crop that fits that bill, specialty crop insurance could be a good candidate for you. Next slide, please. So this is the list of crops that are allowed for specialty crop insurance, and you can see blueberries on that list. This is what Seth is growing in Maine. He's growing a very cool, very old variety of low bush blueberries that have been cultivated since Native Americans were, burning kind of the berries to reinvigorate them annually. And he grows them. They were also a really important crop in the Civil War. So like getting to that like cultural importance and regional importance of a crop, they're also an extremely nutritious crop. Initially, Seth was denied specialty crop insurance for that crop, but he did a lot of self-advocacy and has been granted that now going forward. And he's had some really extreme climate events, weather events in that area over the past few years where he's lost whole crops of his blueberries, which he does process in a value-added context for sale and distribution. So sometimes if folks are in a situation where they get denied, please send them our way or encourage them to self-advocate, because there can be things negotiated even if the first answer is a no. Next slide, please. So here's Seth again with his beautiful buckwheat. If, for example, so Seth grows like volume of a few things. He grows volume of Brussels sprouts. He grows volume of carrots. He also grows volume of these low bush blueberries. But let's just say maybe specialty crop insurance was denied and he was unable to negotiate a different answer. Then a couple other options would have been whole farm revenue protection, which we're about to jump into, or those written agreements that we just finished talking about. So specialty crop insurance has also expanded over time, and that's not on accident. So in 1994, they asked for an expansion on specialty crops, and they've been working on it over time throughout the farm bills to make specialty crop insurance work better for producers. So next we'll dig into whole farm revenue protection, which I need to mention the National Sustainable Agriculture Coalition here. OTCO is a member of NSAC, as is OFA, and we're grateful to them. They are very effective at working on the Farm Bill, and they were very effective at establishing whole farm revenue protection as an option for growers. So this was born out of the sustainable agriculture community. It is much, much newer than other forms of crop insurance, like way newer than multi-peril, for example. And so it's had to have some kinks worked out over time. So some folks might be like, oh, whole farm doesn't work. Well, it's changed a lot recently. So it may work better now than it did previously. Another misconception that I need to share about this is a lot of times agents will be like, oh, we don't have that here. There's no whole farm here. That is not correct. Whole farm is available in every county, in every state, in the United States. So if somebody's running into a jam where somebody says we don't offer that, we would want to send them to that whole farm revenue protection agent locator to get somebody who's got experience with these plans. Next slide, please. So here's what Noah Went says. He's on the right there. Those are his sunflowers, apropos sunflowers. And he's an organic farmer, but also a crop insurance agent, part of our group. And he says, whole farm revenue is something not many insurance providers know enough about. Next slide, please. So here's Scott Myers on whole farm. I have a lot of experience with crop insurance. When we decided to transition to organic, our agent was telling us about whole farm revenue policy. We quickly realized that in organic, we were significantly unprotected. It was a paperwork nightmare. We weren't getting insured the way we needed to. It was a mess. So this was like iteration 1 of whole farm, okay? We eventually went back to using whole farm revenue after I was made aware of some of the changes that were made. We're about 3 years in at this point, and this time around, the process has gone much smoother. So, and Seth has, I think, a 7 or 8 crop rotation in grain crops and also produces a lot of hay. So he, would likely benefit from a more diverse policy, or a policy that serves more diverse rotations, put it that way. So whole farm revenue is different because it insures on the revenue of the operation rather than on yields. So you're not using annual production history. The challenges associated with that are not involved in this policy. And if one crop fails and other crops do well, it's unlikely that folks will get a payment, if that makes sense. Next slide, please. So here's Scott again on this topic. Crop insurance is supposed to allow us to farm another year. It's not supposed to guarantee us a profit. When I buy car insurance, I don't insure so that when I have an accident, I get a better car than I had before. I just get it to have wheels to drive. Whole farm revenue protection is designed to make sure I have wheels. It's really kind of a unique and cool policy. The microfarm policy is a sub policy of whole farm revenue protection designed for smaller farms and with an effort at minimizing the paperwork that's required, because one of the reasons not a lot of agents will say they don't have it or they can't do it is that it can require some more work on the part of the agents and some more paperwork on the part of the farmer. But the microfarm program is streamlined a little bit. Next slide, please. So here's an example for microfarm. Jill and her family run a small CSA. In addition to the CSA, they raise pastured poultry and they make jam out of a 1/4 acre raspberry patch. Microfarm would enable Jill to insure the revenue from all of these enterprises in one policy. Next slide, please. There's also pasture, rangeland, forage insurance, which I wanted to make sure to mention because what I hear from farmers is that this works really well. It's based on NOAA data, which is the National Oceanic and Atmospheric Administration data, and they have like a grid system throughout the whole nation. And if rainfall falls below a certain amount in the grid that the farm land is located in, if somebody's signed up for PRF, they automatically cut a check. And my understanding is that this works very quickly and that farmers find it to be a very convenient insurance option. There's also a marker bill that uses the same concept for the forthcoming, whenever we get their farm bill, that, they kind of realize that this program worked well for farmers and are trying to replicate it in other forms of insurance. But my understanding is this one's a good one. Next slide, please. So then we'll get into transitional producers. And here, I don't know, Ben, if you want to jump in and talk about the plans. I will note that if a transitional producer has an option for a contract price that's higher than their APH would allow, their annual production history would allow, those are pretty rare. But if somebody should be able to find one, then that could work for them, the contract price addendum. And then I'll pass it to Ben on the transitional production plans.
Yeah, thanks, Julia. So yeah, I just wanted to quickly mention that there's this new transitional production plan, which the National Organic Program worked with RMA to develop this as a way for transitioning producers to qualify for these transitional premiums where they do exist for producers. And this was in place of doing a full review of an organic system plan for a transitioning producer, which was problematic because they maybe didn't have a full OSP. So it's a shortened document. And I just wanted to share that we have been working on this as part of the TOP program, and we do have reviewers who can review these TPPs on staff. So if you do have transitioning producers, we can help them navigate their basic eligibility for when it makes sense, and can do the reviews of those plans so that they're able to take advantage of those programs when it's possible. So yeah, thanks, Julia.
Yeah, you bet. Next slide, please, Natalie. Thank you. So then we're getting into NAP. And Susanna, I see your question in the chat. Hi, by the way. Nice to see your name on my screen. So Susanna's asking, how is risk management insurance different from NAP, which is the non-insured crop disaster assistance program, which, as Susanna notes, is not through RMA, but is through FSA. And the short answer is NAP is not insurance. It's actually disaster assistance, but it is definitely, to your point, Susanna, part of a farmer's risk management calculation. So we'll give a couple examples of how NAP works, but it's basically, it has to be pretty bad for NAP to kick in. Like, that's the first thing we need to know. And then secondly, I want you to know that farmers that participate in whole farm revenue protection and the sub program of that microfarm can also participate in the NAP program and kind of hedge bets that way. It's also important to note that, at least as of today, beginning, limited resource, socially disadvantaged, and qualifying veteran farmers are eligible for a waiver for the service fee and a 50 NAP premium reduction, which again, I need to credit NSAC for that advocacy because they really led the charge on that one. Next slide, please. We'll do some examples. So Sal's strawberry field is damaged by a severe drought. NAP will cover the loss of income that Sal experiences due to the drought, but it won't cover the damage to the plants themselves. So replanting's on Sal. Does that make sense? And then another example with bees. So Rhea experienced a loss to her honeybee colony due to a hurricane. Maybe she was in North Carolina last spring, or last fall rather. NAP covers the income to Rhea that was lost from the honey that was not produced, but does not cover the loss of the bees. So Rhea has to reinstall bees on her own. Next slide, thank you. So we're just returning here to these printed materials. You don't have to memorize any of this. If you ever want to talk about any of it, give me a ring. Happy to do that. And the materials are really nicely done. So good job, Akko. Thank you very much. And then I've just got one request of you here. If you could please, what do you call it? Like zoom in on the QR code and click on it and do the training eval. We would really appreciate it, because this is grant funded by the Risk Management Agency. And I'll just be like that awkward person who, even though we're 2 minutes over, just waits while you do that with lots of appreciation. And then, has everybody got that link? I'm hoping you've got that link. Okay. Yes, Julia, we've got the link. Good. Okay, I see some thumbs up. Thank you for the feedback. Very good. And then I will just note that you are all invited and welcome to share with others. We have a number of farmer-led work groups at Organic Farmers Association. They are indicated to identify barriers and brainstorm solutions that are farmer-driven for our food system. We obviously have one on crop insurance. We have several others as well. One right now going on NRCS, and one forthcoming on imports. We do one ahead of all of the NOSB meetings to prepare for those and help inform our comments. So would welcome you as inspectors there. Always grateful to have inspector voices, and also would welcome any farmers that you'd care to share this with. And I'll stop there. Thank you.